morning, good afternoon, good evening, maybe even. Thank you so much for joining us once again for the bi-weekly Dairy Café. Vesper's effort to keep you updated on everything dairy within 30 minutes. Today, we're not joined by Seb. Unfortunately, Seb has decided he prefers going on holiday instead of informing you on anything dairy.
Priorities, yeah.
Yeah, priorities not straight, which doesn't matter because Jasper and I will do our best to keep you informed. We have two halves to our program today. First half is a general market update, and then we'll go into everything that has been discussed, has happened, has been amplified, has been discredited at the ADPI in Chicago earlier this week, walking you through at least both the sentiment, but also the data backing that sentiment within the markets. Jasper, how's your week been?
My week's been okay. Wasn't in Chicago, still in the Netherlands, and we had King's Day on Monday here, which generally means a day off. We're not too unhappy about Labor Day tomorrow. So yeah, we also had a shorter week. No, everything has been fine. Doing good. And well, it's been quiet in today's dairy market, but I must say that it's actually still quite interesting, and there's enough to comment on.
Perfect. Well, it must have been quiet, as everybody I know within dairy was in Chicago in the past week, where it wasn't quiet, but that's for the second half of the show. We'll start with the general market update. So across different products, what's been happening?
Yes. Yeah, we have seen a clear divergence this week between milk fat and milk protein. I won't steal your thunder on milk proteins for the second half because that's generally where the US comes in. But starting with milk fat, we definitely saw prices decrease a little bit further. Here we're looking at butter prices for the last 3 years. Actually, that seems to peak. We're now really like 50% lower than what we saw before. If you look at the developments over the last few weeks, it just keeps moving slightly lower every week. We're looking at the prices in dollars. I'll change them into euros for this case. But they're all moving lower and now trading well below 4 euros again. It's a level that we saw in Jan, but now we're really starting to see again. And honestly, I expect that this is actually going to go further down a little bit more in the coming months. And butter really kind of is the main product being pushed down. It's being pushed down in Europe. It's finding it's hard to find buyers from Oceania, but also US is seeing slightly lower butter prices. So the global market for milk fat is really struggling to really hold ground around current levels. I won't make it too technical, but in essence, if the milk supply is as high as it is today, we see that the need for exports grows in markets like butter, but also cheese. And yeah, to be able to export, you need to be competitive. And that's what we're seeing, especially if you pull up some international butter prices here. So let's use the US price as well as the Oceanian price. I'll click away some of the local butter prices. And if we compare these in dollars, in recent months, you are starting to see actually that they move much more in line with each other. The Oceania trades at a premium, the US in the middle, and then Europe in the middle, and the US all the way at the bottom. Well, if you look at the longer term history, or the long run history, these sometimes have been much more alternating. Some have been higher, some have been lower, but in recent months, they're moving exactly in the same line, depending on how bad they need the exports. Then we move on to skim milk powder, which also had a bit of an interesting week. We all know, and I think we'll talk about it more later, that US non-fat is still pushing up the global markets for milk powders. So US S&P, US non-fat dry milk is trading very, very close to $5,000 a ton. Remarkably high price, and especially well above all the other prices that we're seeing in especially Oceania and also Europe. So the spread is large. We might talk a bit more about it later, but we've only seen it being amplified this week. Global uncertainty is high. Oil prices skyrocketed again because there's no real end of the conflict in sight. The conflict in the Middle East, I'm talking about, and that kind of those uncertainties really start to stack on top of each other. Today has been a mix of hundreds of things. There's been inflation rates that's been coming in higher, economic growth that came in lower, oil prices that moved higher. 20 different things packed in 1 week. So like as I mentioned, there's been enough to comment on. But in general, for butter fat markets, it's been pushing them lower. In the case of milk powder, it's definitely been up thus far this week.
If we look at a spread between this, for instance, the US price and the European price here,
Yep.
and we zoom out as far as the data set here might go, have we ever seen a spread this large?
Well, of course we can do that. I've pulled the spread. I'll pull away some data, and I think to keep it clear, only US and Europe.
Yeah, you can also just leave the spread. It's fine. Just
well, long story short, no, it's never been this large. And previously, we've anticipated, or we talked about how $400 a ton was actually a big spread, and that might converge real soon, and it did. 1,600 or 1,550 US dollars a ton is exceptional, and even this price compared to the euro, or at least the spread, it will converge. It will move back to zero someday, but yeah, the larger the spread, the more time it takes for that to take place.
Clear.
Final bit is about cheese. I don't want to talk about way too much because we will do it in the second half. Cheese prices are just like butter, really dependent on exports. In this case, we have seen that. I'll zoom in a little bit more. These prices are converging again. The spread between these two is less than $100 a ton. We see that supply weighs heavily in the US, supply weighs heavily in Europe. Consumption is fine in all regions around the world, but we just need to make sure that the exports are good enough to make sure that stocks don't skyrocket at these relatively low levels. Because if we zoom out, mozzarella is definitely relatively cheap. There is plenty of export demand, but it's absolutely interesting to see that a cheese market that's not necessarily seen as a global export market is suddenly much more dependent on exports than it has been before, especially when domestic clients are happy to wait and see prices fall like we're seeing right now. So I would definitely plant cheese under the same umbrella as milk as butterfat, AMF, and other fat products. Slightly lower and really in need of export demand.
Yeah, we got a question in on the Q&A, and that we're showing lowering prices for butter. However, they are receiving price increases for this category, and whether that's a reason it isn't reducing, and however, we did get a reduced prices for milk, so the farmer payout price.
Sorry, the exact question is why the butter price went up for their contract.
Well, I think it's a difficult question, as I think you're suggested to comment on an individual supplier. But is there a reason why, with what we're showing on butter prices currently and on the pressure on butter prices, is there an argument for it still to go up?
Today, not really. I think the main argument, and I'll focus on the milk intake for that. The main reason that butter prices are going down, I'll pull up global milk production. I will actually standardize it to 30 days so you get a great overview. This is the global surplus of milk captured in one graph. Like ever since we've reached Q2 last year, there has been a huge surplus of milk in the yellow line, and it's continuing this year. This surplus of milk is pushing down prices, and that surplus of milk is not really vanishing within a couple of weeks. So we do expect that this will keep a lot of prices under pressure, including butter. But we also know that a plus 5% milk output is not going to stay. So based on uncertainty, we do see that there is a subdued interest to sell forward a lot at really low prices, because there's still... I mean, with the previous years in the back of our head, we can't just assume that milk output will be great forever. We know that we're in a shortage in the long run, and that's got to push prices back up from these low levels that we are at right now someday. So that might be a reason why there is a bit of some might call it a risk premium in place for certain products. But if you ask me, based on today's supply fundamentals, I don't really see a strong reason why butter prices should be a lot higher at the moment.
Thanks for that answer. And then we'll continue.
I think this is looking at this. We have plenty of things going on globally. Butterfat globally is not looking great, together with cheese. Milk powders have found their way up slightly, but I think the most important and interesting market this week, even though it wasn't even there, it was all about Chicago. The ADPI was definitely it's a great conference, but this week it's kind of amplified something that was already there, and whey powders and whey proteins, and in some cases even milk proteins, have definitely been the rising star. But I wasn't there. You were. I'd love to hear from you what it was like, how the feeling was, and how everybody was chatting there.
Yeah, I think it's and we'll come to the question in the chat as well about US exports, because I think it's part of this story. I think the amplification is maybe the best word, and I'm not saying, when I say amplification, I'm not saying it's unjust or it's not right, but the amplification of a certain sentiment always tends to happen if you have so many people together. And what a vague noise is all of a sudden becomes, especially after long conversations, also a lot of meetings, but also at the bar, at the coffee machine. Everybody is checking, hey, where are you? Do you see the same? Do you feel the same? Also, people would maybe not regularly speak to each other. All of a sudden, hey, how are you doing? And I think it does amplify. And the amplification came, I think, on, or at least the attention was on, two topics. One, of course, is the whey market, and the other being the non-fat market. What's happening there, and what will happen, of course. I think that's the key thing. I would like to take you through just some of the charts that we went through in our discussions over the past days, and get you to comment on them, Jasper.
Yeah.
And I'll share my screen for a change. And for anybody where this might look slightly different than Vesper looked about a week ago, it's good to let you know that we've implemented some more customization options as part of our dashboard improvement project. We also got some feedback for you, which I'll comment on as well. But one of the things is widget resizing. So a new button you see up here is the edit button. So if you scroll all the way up in your dashboard, you're going to see edit. And if I press this, I can give every widget a different size. There's 3 sizes now. We had, before yesterday, we had 2, which we got a lot of comments on because you no longer could have a full screen. But now, if you put it on S, you can have 3 S's on one row. You can have 2 mediums, as you see here, on one row. Or if you press large, it will always be full screen. So you can change that. If you want to have a graph in full screen, just change to large, it goes there. If you change back to an M, you can have 2. And you can just drag and drop widgets where you would like to have them to really craft your own dashboard in any way you would like. Whenever you're done, just press done, and it saves, and it says that like that. Okay, that's enough about widget sizes. I'll put them all on an L to make it as easy as possible to see back home. Sorry?
Seb is going to be mind blown by the time he's back.
Seb is going to have no clue what happened to him. The first chart, of course, I would like to show, and which we've discussed a lot, and I'll put it to the top using the edit mode again, is generally the price change in AD especially. And every time I walk through the hole, we saw AD prices increase. I'm looking at US dollars per pound, where before the show started, we registered them at 10.9, and they went up 5.5% on business this week. And 11.5, I don't think you have a hard time to find buyers at the ADPI. I've seen people shouting through the hole saying 11.5, I'll take it, anything I can get. Very hard to buy in general, but also more and more people questioning the gap between WPC 80 and WPI, whether it is big enough to keep WPI going. What are your thoughts on this chart, Jasper?
Well, the thoughts on the chart, I would love to comment on WPI as well, but let's start with the chart. It's not something new. It's basically the same thing that we've been discussing for months already. The WPI and WPC 80 markets are tight. Like, there's not enough supply, especially in the US. There's so much consumption going on. The prices should be at higher levels. I didn't really anticipate that suddenly they would jump, but it's not the first time that we see them jump during a conference like this. It happened on the back of ADPI before. It also happened on the back of Go Foods in certain product streams, product groups. So it's not new, and especially because that market is in a shortage. And I don't know if people hope to buy some volumes on the spot during ADPI. It just gets amplified. And on the spread and between 80 and isolate, it's actually an interesting one because the previously what we've been looking at is as people that find WPI a bit overvalued, no real production taking place. WPI be undervalued and no real production taking place, and people saw that as something that might turn the 80 market around. Okay, hey, we will now have a lot more 80 rather than WPI, so that might actually overflow the market for 80. Well, I think that long story short, that's not a situation that we anticipate on happening. Supply is not really ready to fix this shortage of 80. So now it really looks like the WPI is finding its way up because that balance needs to be restored. Initially it was seen as a potential threat to the bullish market of 80, and now it's turned into another reason why 80 should be priced even higher than it is today.
Is there any rule of thumb that still works in this market? I think a lot of the rules of thumb of the past we've already thrown out. Is there a 80 to WPI spread that we see most often?
Well, I've actually been researching this a little bit lately. I was always under the impression that in Europe we had 80 times 1.5 should be your isolate price. But I then realized that in the US and also in other regions such as New Zealand, it's actually always slightly different. It's really dependent on the producer. Of course, you get in 80, you split it up into whey protein isolate and another high protein but also high fat product. It really depends on how well you're able to sell and at what price you're able to sell that other high fat, high protein whey product. And that really determines the spread. I think usually we stick to 1.5 times 80, but in recent times it's already looking more like it's in the case of US, for example, 80 plus $2 a pound should be isolate. But I'm really wondering whether those will stick in the next few months.
175 now. Let me pull up this widget next. First, before we go to NFDM and the non-fat markets. Looking at 80 in the different regions, the spread there seems to remain really tight. There's still a 30% gap, or 30 cent gap, but that should not be enough for any type of arbitrage, I assume.
No, it's not. We do see that the general kind of feeling lately has been, okay, the US used to export to Europe a little bit as well, but that hasn't really been taking place anymore. So it's really about, okay, I have production, where can I ship it to best? And in the case of Europe, we're now shipping a lot to China. New Zealand is shipping a lot to China at the expense of US. So US is setting the tone. Other markets follow, but arbitrage between the two markets not really taking place. It's really a competition with third regions. That's more of a driver.
Yeah. Then maybe heading on to the non-fat, what's happening there? I think you already showed the chart of like a global S&P comparison, but one of the topics at the ADPI orders is kind of what are the knock-on effects of this non-fat price. So of course the expectation is it will incentivize producers to produce more non-fat, which it came by producers being incentivized not to make non-fat in the past. So that's flipped. But what are the knock-on effects, especially in both butter markets? So for butter availability, will all this extra milk going to non-fat also lead to even more pressure on already a downward trending butter market? And secondarily, does the pricing mechanism for non-fat still work for NPC markets? So using a multiplier on non-fat to actually price your NPC is what happens a lot and what we've seen a lot, and whether that still makes sense. Do you want to comment on butter markets first, or should we go to the NPC pricing first?
Let's start with butter first. I think this is definitely something that was fascinating at the start, and I actually got to learn more of the more I started looking into it. using the class system, for example, in the US, where we really see UK class 1, more fresh products, class 4, all the way butter and non-fat. Pricing between these products absolutely has impact on where these products, where the milk will go. There's not full flexibility. It's not like people will turn off the cheese and whey tap and go all in on butter and non-fat, but there will be some switching taking place. So yes, indeed, more milk will be headed towards cream/butter, as well as condensed skim and non-fat dry milk. So that will definitely play a bit of a role. It also is going to be amplified a little bit by the milk season. We know that California is really big on milk powder production, and we have seen that production in that region is showing strong signs of growth, and that should fire up a lot of the drying towers. And we also hear that that is already taking place due to the incentive to produce more non-fat, because it gives you a great return on your milk. So that's definitely something that we see taking place. The fact that you can store butter also tends to help. I mean, if you have a large oversupply, freezing butter is simply sometimes a more favorable option than producing a lot more cheese that you have to sell on the global market.
Yeah, sounds clear. Then heading on to the non-fat pricing mechanism. This is a chart we've talked about a lot, and we've also made for a lot of our users in their graphs. Yeah. And the chart you're seeing on the screen here is non-fat CME multiplied by 3.2 versus our own MPC 85 price. And why 3.2? Let me show you how I found that out. The question I asked our co-pilot here, which is now available in the chat, in this sidebar as well, and I will give you a bit of an insight into my previous chats, which is a very personal thing these days. But just simply asking what's the average multiplier between CME spot non-fat versus a US MPC 85 VPI is really a great example of how it can do research for you. So the average multiplier over time of the past year was 3.2. So I took that as a starting point, and you can keep on asking what is it currently, give me the average of the past 10 weeks. Well, you know how these things go if you get into a conversation. But we took 3.2. Then we went to our cost model widget and decided, okay, we'll just do a very simple thing. We'll create a new cost model, and I'll edit this one, but you get this screen. You select non-fat. You select the recipe share of 320% in dollars per pound in this case. You save it. And in this case, I don't need to save it because I've already saved it. Then if you refresh your dashboard, you can then in the second dropdown over here, the cost model dropdown, select it and overlay it versus an actual price. Okay, that's the Vesper adoption part. But then if you look at these price levels, where we've seen they've always been more or less in check. It's a multiplier that works as a pricing mechanism. What we saw, it was cheap compared to what actual market prices we're receiving was, but all of a sudden it's exploded. And if this is still your contract, well, you're currently paying around $7.22 per pound for 85. Well, we see people using a benchmark buying it for $5.80. So this gap has been massive. And this is also where we see that the multiplier strategy using non-fat at the moment is really out the window. The reason for the multiplier to be this high is because a lot of the milk went to NPCs and to UF. And if we then also use that once again for NPC pricing, well, I think you're kind of shooting yourself in the foot. Is that a fair assessment?
You're doubling down on an increase of your price level, and that's definitely indeed correct. The multiple business or using multiples, it makes a lot of sense, but sometimes, and that's what we've seen in recent years, these really fall out of line. If you use a multiple in European butter and cream, for example, it would be below 1. In this case, that 3.2 multiple on non-fat dry milk to get MPC 85. It used to make sense, but if kind of markets are as volatile as they are today, that might actually lead to large spikes. And we both know milk protein concentrate should be priced higher. If the entire milk protein complex moves up, and if whey protein really moves up the way it does right now, but a short squeeze in non-fat dry milk shouldn't necessarily be the reason why MPC 85 has to go times 2, because that's essentially what we've been seeing. Non-fat prices really moved up from $1 and a bit to $2.20 at the moment, 25. That should lead to a 100% increase in milk protein concentrate as well. I think that's a bit much to ask.
And we got some questions in the chat, which we'll answer later through the chat, which we're on the platform. Maybe now, Jasper, we spoke about the knock-on effects on MPC, and we spoke about the knock-on effects for butter potentially. But maybe a good one is the actual question that everybody has: what's going to happen to non-fat? Does it come down? You comment on it quickly already, and we also got a question in the chat about to what extent will some of the key importers of US non-fat, so on the demand side, so Mexico, maybe transition to other geographies?
Yeah, that's already taking place. So I think the reason why non-fat was pushed this high was because supply was short, and in the US it still is. And I just commented on the fact that milk production in California has been good. Milk powder production will come in. So it looks like this market is turning slightly. At the same time, exports have been good so far. March and also April numbers are yet to come in, but we do of course predict that some of these $1,600 per ton spreads will start to play a role. We've already heard exporters from Europe mention that they have been exporting a bit to Mexico, which is of course one of the biggest regions where the US is generally exporting non-fat to. So we are slowly starting to see that play a role. Supply will move up because the price is higher. Exports will move down because the price is higher. And it also depends on how much domestic demand is really interested in purchasing a lot of volumes when these prices are higher. So yeah, it's a saying that it's coming around every once or so, but the best cure for high prices is really high prices. It affects supply, it affects demand, in this case mostly for exports, and that should start to really push down US prices in the long run.
Yeah. The difficulty, or maybe that I've heard, it's not super easy for Europe to export to Mexico from a regulatory standpoint. So even if the pricing is right.
No, exactly. That's it's not like we will replace every pound of US non-fat that goes into any region such as Mexico, but it's like all these bits and pieces. And since milk powder markets are export dependent for like 50% of the total production, if they lose 1, 2, 3, or 4% of that really starts to play a big role. And we know that the supply and demand balance can overshoot, but it's also a relative thin balance. So a couple thousand tons or a couple 100,000 pounds can definitely play a role. And if the price spread is as large as it is today, yeah, that we will see significant volumes being moved elsewhere or being imported elsewhere.
Okay, we got another question in the chat. One about, and that's I think always a good one, the time frame you're looking at for non-fat prices to start correcting.
Yeah, it's a difficult one because if somebody would have the real answer, they will probably become a millionaire by going short on non-fat at the right moment. But I do expect it sooner rather than later. I mean, we are at the peak of milk production. Futures are heavily backwardated, so there's a lot of signals that we're currently seeing that are already pointing towards that something might change. And yeah, I'm not really too comfortable with pinning a certain date on this, but I do expect it that it's going to change in Q2 still. We might see European and then Oceanian prices move up a little bit because the price spread is large, but US is so far above the rest that I'm not really confident in that staying for more than 3 or 4 months.
I think that is an interesting one. You say Q2 still. I think I'll make a bet, and we'll see who's right, that it's going to outlast Q2 slightly. Although I am also surprised that it has gone on so far and that it's been able to reach these levels for a market which is so heavily dependent on export demand. Yep. Then we'll stop this answer. We'll go straight on to the next one. That is a comment on the quota. Yes, there's 50,000 metric tons, and it is the best time. And I think that's also I dare say we agree that global markets define these prices. So shifting demand will change this broadly. And it's the best time to start getting a slot within the free quota. But as I've heard, it's also not a process that's done overnight to get those slots and allocations in there, and not a thing that everybody has been looking for in the past years to be ready for this moment, as it caught, I think, everybody by surprise.
Yeah, I think something fair. But of course, it's also even with the duty, it still earns. So it's next to the duty, it's also a lot of practical things that always come into play when you're looking at importing from new regions, new parties. So it might take, but it's worth it.
For the chats we still have open in the questions, we will get back to you through email as we're running out of time. Thank you so much for joining us once again. Thank you to everybody who we spoke to at ADPI. If you have any further questions or there is comments that you have, you can read the latest report through the link that you currently see on your screen. Jasper writes about these markets. You can find anything there. So please go there, but also feel free to send either feiko@vespertool.com or jasper@vespertool.com an email, or of course your own customer success manager, and reach out to them. We're very happy to discuss this further as the dairy nerds we are.
Yeah, I thought you were going to say seb@vespertool.com, then come back from his holiday, waiting for some emails to reply to.
No, you won't hit an out of office if you send us one. So, well, we'd love to see you back in 2 weeks' time.
Amazing. Thanks, guys.